This is Jon Najarian. It is my great pleasure to welcome the trillion-dollar man himself, Dan Peña. My dogs are going crazy over hearing his name. Dan is, of course, the founder of the Quantum Leap Advantage. He's coming to us live from Guthrie Castle, I believe your castle in Scotland, Daniel?
Correct, sir. Yes.
And boy, the backdrop couldn't be better. And I am really looking forward to this because, folks, number one, he's a successful businessman. Number two, he's been a trader virtually all his life. I'm sure he's probably made money with trading cards, as well as being a wildcatter for oil and drilling and trading futures and so forth, and options. I didn't know until just before we came on air that he was one of the original members of the Chicago Board Option Exchange, or
Correct.
Now they call it, Dan, CBOE Global Markets or something like that. But welcome, sir. It's great to have you.
Thank you very much.
I know that a lot of folks are very excited because of the success, not just that you've had, but that you've shared, and the enthusiasm you bring to the people that you've mentored, to the people who have, I remember seeing some videos online, sir, of you up there at Guthrie Castle, just berating a group of people. Even though you were, toasting each other and having a great time, you don't seem to suffer fools at all, Daniel.
No, I don't. And but the super high performance people I had the privilege of being around, most of which were wealthy, not all, don't put up with the crap either. And that's why I find, I was saying before we got on live on air, I find it interesting, some of the TV programs where somebody obviously says something that's not right, that nobody says, well, you're full of shit. You just keep rolling on, and and it's all right to be wrong, I guess. So, but one of the things I wanted to mention, I was looking at my notes, as I do when I prepare for a talk like this, that, what we might have in common, or some common background, other than I was saying that I've been to Minneapolis in the freezing cold of winter in the early 80s. But in the 70s, in the early 70s, I had the first financial program on television for public broadcasting. It was called TFC, Total Financial Counseling. And it was my idea. And at that time, I was with somebody that ultimately became Payne Weber. They ultimately were grabbed up by Payne Weber. That the future of the business was to take assets, charge them a fee for managing those assets. Of course, now that's what we do now. And I was at the forefront of certified financial planners back in the early 70s. And of course, the commission salesmen didn't like that because they weren't getting paid commission on every transaction. And in those days, the commissions were a hell of a lot higher than they are now. And so I went back to my records. The first trade I made was J. Ray McDermott. I bought J. Ray McDermott, and and I made money. The second trade was a company called Cartridge TV, which went bankrupt. And so that taught me not to believe the firm's research. And so I started doing my own research. But yes, I'm happy, very pleased to be here with you.
Delighted to have you, sir. And turns out, folks, that Mr. Peña may have met my father, the
Correct.
Dr. J. To honor my dad, Daniel, I use his moniker, the Dr. J part, because he's Dr. Jon Najarian.
Correct.
And you were perhaps it might have been that you guys ran into each other with a bunch of other crazy people from Minnesota when you were on one of those freezing cold winter trips.
Yes, well, I'm pretty sure he was at a meeting, a party that I was in attendance, at least one of them. And I was saying before we got on live, and Jesse the Body was there.
Oh, I love Jesse.
And plus some other luminaries. but they were very, very kind to me, and they helped me. They steered me in the right direction when I started my first drilling fund with some of the mistakes I didn't have to make. I made plenty on my own, but they at least helped me through the first year or two.
Fantastic. Well, one of the, myriad of outstanding things that you've done in your life, sir, is you turned $1,000 investment into $430 million. Would you mind giving us a little?
$820 into $450 million. Yeah.
Can you give us a little insight into?
And it was, and funny enough, it was with an option.
Mm-hmm.
But it wasn't an option like on an exchange or on stock. I paid $60,000 for an option on a bunch of oil properties in Wyoming, and I took that option public 99 days later, and I turned it into 100 million pounds, which it was $200 million, and then I grew that company to 450 million. But it was an option, and the guy that sold me the option never thought I'd come back with the other. It was $60,000 is all I had, but the option was for $2 million. He never thought he'd see me again. And then 4.5 months later, I showed up. I exercised my option, and it had gone public. And at that time, you could take an option public on the London Stock Exchange. And then I went from there to the Amsterdam Stock Exchange. I did it again, and then they stopped. They put a thing called the Peña rule. That you have to own what you take public now, or then and now. But that's how I made the basis of my fortune in oil and gas. And it's, it's 7 years later when the shareholders threw me out, as often happens, I was thrown out with a lot of money.
Well, those golden parachutes are really tough, aren't they?
Yeah, they are. I'm sure you and your brother have one there at CNBC.
Well, yeah, but it might not be from CNBC. but yeah, they treat us well. I've got nothing bad to say about them. But I certainly think that when you are able to do something like you did, very few people actually. I mean, for instance, when real estate people make their fortunes, it's almost always made on options, unless they inherited it.
Yeah.
Because they go out and, just like with Disneyland, I'm sure you know the story, but when Disney was out in California and looking to expand into Florida, they were popular enough, and they knew that if people suspected that Walt Disney Company was buying up land, that everybody that they were buying land from would ask for a lot more money. So instead, they went out and got options on a whole bunch of parcels, and they didn't close until they had enough of that all sealed up that they could say, okay, we're going to exercise these options. And, then the rest is history. And the land probably went up, 100 or 200 fold like that, as soon as they knew that Disney World was coming. So options are one of the ways people do get rich. There's no doubt.
No, and even today, and a similar story when they did Disneyland Paris and Disneyland, they had third parties go and buy up all the land. Otherwise, it would have been too expensive.
Yep, I suspect LaFrac in New York, and any of the other, our President Trump. I know he used a lot of options on the lands around square blocks that he was trying to get to tear down and then put up a tower. But like I say, LaFrac is one of the biggest real estate guys in New York, and I know he used a lot of options on land. But the kind of options that you and I traded on the options exchange on listed companies are, fantastic vehicles and very misunderstood even to this day, Daniel. You must get frustrated when you watch it on television or when you're talking with friends at cocktail parties or whatever, and you're just surprised that people don't understand it, because it's really not that tough, right?
No. I mean, and I was saying before we went on air, and when the option exchange first opened up, to get a 30-40% annualized premium was not unusual. I cut my teeth on buying American Telephone, AT&T, and it was at that time it traded between about $39 and $42 a share, and writing the 45s, it was like taking money from a bank because the stock hadn't gone above 42 in years and years and years and years. And then you start doing twofers, and then you start doing threefers. I was short the bear market of 73 and 74 through options. Of course, then I got too smart for my own britches, and I started buying puts, and I did all the things that you shouldn't, when you lose your objectivity. It's a great way to learn just how much not self-confidence, but how much restraint you have as a person if you don't adhere to your own rules.
Yeah, well, folks, you're hearing about this from the $1 trillion man, Dan Peña, and when he's telling you about risk, you should pay attention because he understands that anybody who's made the kind of money that Mr. Peña has made knows a thing or two about risk. And I think I remember, Dan, when I first came down to the floor, it was 1981. And down there on the trading floor, I came right out of college to the floor. And there used to be an expression, sell the 280s and buy a Mercedes. And this was about IBM, because IBM at that time was like, let's say it was 200, 210. And they had options listed all the way up to 280, 280 bucks a share. And most of you know already, but an option gives you the right to do something in the future, but not the obligation. The seller has the obligation. So you don't want to be short the option unless you're willing to provide what that option guarantees that you will have to provide. But anyway, a lot of people elected to sell those calls and made fortunes. And that's why they literally, Dan, would come into work on a Monday and say, sell the 280s and buy a Mercedes. And they do it almost as a luck, as a, rubbing somebody's rabbit's foot or something like that, because every time these calls finished out of the money and they were selling them for $6, $8, even though they were that far out of the money, because there really weren't sophisticated option programs back then. There were mainly just people calculating in their head, well, if the strike underneath it is trading for $9, these must be worth $6. And if two strikes underneath it, they're trading for 20, then these should be worth 10. And they're just basically trading one thing against another thing, but not necessarily using the sort of sophisticated modeling that is available today. I mean, today, doesn't matter if you're at TD Ameritrade or if you're at Schwab, which is going to be TD Ameritrade anyway. Wherever you are, there's probably some sort of option calculator built into their trading platform. But when you and I started, there wasn't any such thing. People were just taking shots in the dark practically at what that option was worth. And it was always relative to another strike, either the call or the put, to determine what that option would be worth.
Well, I know there's all kinds of sophisticated programs and algorithms, and it's quite remarkable. One of the things that I often ask myself, and today when I was watching CNBC, and I believe it was your brother that was on today, and the information that's given by that panel that you and your brother sit on appear to be almost always short-term, towards the short term. And the guys, other guys that pontificate about buying the stocks and whatever, or it seems to be short term. Whereas my experience has been that most of the people that buy shares in both either the UK or the US aren't short term. They're investing supposedly for their 401ks or whatever. Yet the information that you're giving, especially on the option side, you're out, 30 days, 15 days. I've heard you say, I'm in it till next week. or I'm in it for, whatever.
Yeah.
Do a lot of people that follow options listen to that program?
Yes, sir. Yes, sir. And knock on wood, the unusual option activity that my brother Pete and I cover, nobody else does that on television. And it's really us just looking for blocks, Dan, blocks of options that are traded at or above the market, which we think is a tell for what the big institutions are doing, because it's hard to hide their footsteps when they're buying 5,000, 10,000 options. It's a lot easier to hide it in stock, and you never really know what the time frame is with stock. But you and I know with every option that trades, you know the strike price, you know the time frame, the expiration, and the premium that they paid. And that helps an awful lot in determining if it's going to be something I want to follow or something I don't care about.
Do most family offices that manage their own money have an option strategy?
No, I would say, Dan, that most do not. A few do. Like, for instance, there's a lady that was on the show. I can't remember if it was today or when I was on yesterday, but her name is Bryn Talkington. It's a great name, Talkington, for somebody talking about stocks on television. But Bryn is a good friend and very smart lady. She runs family offices and big money out of Texas. And so a lot of oil money. And she uses options a lot. But most of the people on the shows with us don't trade options at all. Very few do. And again, that's an edge that you had practically right when you were getting started.
Correct.
In the business. Because if you understand options, which obviously you do, sir, that's a real edge. And I think that's, something that you can leverage up that knowledge to make even more money.
Yeah, well, I use it to my benefit, as I illustrated with that, taking that company public, and I've used it to my benefit other times. But the market is much more, from a technology point of view, much more sophisticated than it was. I mean, just by a factor of 100 probably. But the main guy or the main gal still is buying, 500 shares or 1,000 shares, or now you can buy fractional shares, I'm told. Some company they heard a story about, and most people I learned while I was with the Onassis group, investigate before you invest, and it's one of the best bits of advice I ever got. And most people don't do the proper investigation.
Right.
They just take it on, I don't know if it's blind faith but we had an 11-year bull market.
Yep. Let's talk about that. Is it over? Or is it about to get restarted?
Yeah, well, in my judgment, yes.
It's
And
over?
starting in 2017-ish, when we were about the 8th or 9th year into the bull market. And we hadn't been the longest bull market in history yet, but we were getting towards that end. And I said, no bull market lasts forever.
True.
And I heard people on CNBC, not you or your brother, talk about there was a new. Okay. And part of that new is there was the implicit in that new is there were going to be no more bear markets. So I know he was full of shit for sure. Okay.
Yes,
but on the program, you don't tell him he's full of shit. Nobody says that.
Right.
And Judge Wapner, right?
Yep.
Okay. Now I knew the real Judge Wapner, the real judge. Anyway, he seems like a bright guy, but and occasionally he'll pin a couple of the guys, the sailor guy, the farmer.
Jim Lebenthal. Yeah.
Yeah. Or the Weissman or the guy with the
Steve
curly
Weiss.
hair.
Yep.
Yeah. Every once in a while, he'll pin them to the wall. Okay. Every once in a while. Not often enough in my judgment, but anyway, every once in a while he will. And it's almost like they get offended. I don't know if it's they get offended because they're either wrong or they get offended because it's on television, or they get offended just because they're not used to, they're just surrounded by yes men. I'm not sure what it is, but I said that we were going to have a tsunami. I said back in 2017-ish. And then when President Trump, full disclosure, I knew President Trump in another lifetime. I haven't talked to him in 25 years. I said that the 3 things I wanted in life, I wanted low interest rates, Trump, and I wanted some sort of tsunami to bring sellers to their knees so they became motivated. Well, obviously, in the last 45 to 60 days, the third part of that happened when we had the coronavirus. But I don't believe. I believe that everybody is being Pollyanna about how severe this market has been hurt. I believe they're being Pollyanna, and I'm an optimist, but I'm a realist. I suffer from what's called the Stockdale Syndrome. Stockdale was the admiral that was the longest captive in prison during the Vietnam War, and where a lot of people lost hope and died of a broken heart. He didn't, because he was a realist. And people aren't being realistic. If you walk through, and you don't have to read the Financial Times, and you don't have to go to University of Chicago graduate school, and you don't have to go to Harvard to figure out how the entire world is affected by this. There's a reason why Warren Buffett sold all his airlines.
Yep.
Okay.
Businesses have changed.
Okay.
Overnight, practically.
He's right. There is a new, but the new isn't that we're not going to have any more bear markets. And I made in January, I said the tsunami was coming, and then 6 weeks later it came. But right now, if you go back and look at the pandemic of 1918, it lasted about a year and a half. The market, if it retraced almost 50% that it retraced, then it would have gone down to about, using the Dow as an indice, and I know it's not the only one, we would have gone down to about 16,000. It went down into the 18,000s before it bottomed out and came back. But it took through, and we were at war then, if you remember. Well, you don't remember. We were at war then.
Neither of us remember, but we were.
And the whole idea, it took, we went into a depression. It took 25 years for the USA to recover from the 29 depression to 1954 to where the indices were at the same place they were in 1929. Now, we have a lot of things that differentiate us from that pandemic, but not that many. People are scared shitless now.
Yep.
People my age will never go on a plane again. People my age, and nobody loved booze cruising more than my wife and I. No, people my age never going to go on a cruise. Right now, Carnival is sending out cruises that were $5,800 or $400 now, and they still can't sell them. The world has changed, and there is a new. And and you probably know these numbers better than I. Before the pandemic, 85% of the money managed globally is managed by kids less than 30 years old.
Yep, they've never seen it. Yeah.
Nothing. Less than nothing. And the best news about your panel is there's no kids on there. Well, to me, you're all kids, but I mean, there's no real kids there. There's no real kids there. You can get a whole other dialogue or a whole different set of opinions when you talk to young kids that are in the business. But most of the young kids, and I call them snowflakes because they melt under pressure, I don't see, in my age, my group would take a page out of a phone book to wipe my ass and not worry about toilet paper. Most kids don't even know what a phone book looks like. As bad as things are, I don't think they're that bad. I've been through 7 recessions. I mean, I've seen some ugly stuff. Of course, I'm positive that my background, starting from my Wall Street days, these many decades ago. But I remember I wasn't in the market. I was in the market personally in '87. I wasn't in the business. I wasn't on Wall Street then. But I remember guys that were still in the business calling me because I was with Bear Stearns and calling me for a job. Partners at Bear Stearns were calling me for a job because I was allegedly and for real, I was very successful in the oil business. It's going to be a lot worse. I tell people, people ask me, how did I know that the oil was going to go to zero? Which I did. I called that a few weeks ago before it happened. And I said, there is no algorithm for 50 years of experience. 1. 2, I understand, I cut my teeth in exploration, drilling dry holes. 3, I have been in the pipeline business, so I understand transportation of oil and gas, and I've been with the Onassis group. I understand the big transportation in super tankers. And more importantly, I've been in business with the Middle Easterners. I've been in business with the Russians, and I understand President Trump. And that, you know, we have 5,100 wells in the North Sea. They're figuratively underwater and literally underwater. There's no way those 5,100 wells in my lifetime are ever going to make any money. Never. And as far as simple supply and demand, if we have roughly 10 to 13 million more barrels than we need, we're producing, at some juncture, supply and demand, the economics of Econ 101 are going to take over. And that's what's happened. In August of 2014, I called when the oil was $120 a barrel. People were talking about $200 a barrel oil, and I said it's going to be 40 before it's 200. Within the next year, it was 26. But I don't think maybe I'm the only guy that does rig counts, and I don't understand. And by the way, this rally in oil right now is mostly on optimism because the world supposedly is going to be unshut. Has nothing to do with supply and demand. Nothing. Because we're still 8 to 10 million barrels a day more than we use. And it's quite remarkable here in because I'm right near the North Sea. There's going to be 250,000 jobless people in the next 6 to 18 months, which is going to have economic reverberations all the way down to here. But you know, I find it options, and I didn't plan on giving you this plug, but options may be the only way to combat this, because you can, you know, hedge yourself, but most of the kids don't know what, you know, most of the kids lift a leg on a spread, and I was always taught from my commodity days, when you lift a leg, you piss on yourself.
I love that. I'm gonna use that. I'll credit you with it, Dan.
Okay.
But so when you're seeing crude oil, and as you say, you thought it might go to zero, and it did. It went below zero. But that was because, I mean, it went for all the reasons you cited. But then the reasons that it went below zero were also that the people that stupidly held those contracts into that into the settlement, if you will, something you understand very well, those people could not take delivery.
Correct.
And the storage was already spoken for. Now, most of those people couldn't have afforded the storage anyway. It was trading at like 5 times the normal level. That, I mean, I saw tankers that they were asking 30,000 for were being asked 200,000 for per day as floating Correct. Storage and so forth. So when you've got a situation like that, you know, sadly, a bunch of amateurs held those contracts. There was nobody from ExxonMobil, from Valero, from BP, from Total, nobody from any of those companies would take that into settlement unless they already had the storage, because they're going to make you take it. They're going to say yours. They're going to push it across the table and say, these are all yours, Dan. What are you going to do with them? And we had some of the dummies at CNBC that were saying, well, couldn't you just put all those barrels in the parking lot at Met Stadium? And I'm like, well, technically, yes, you could. If you drove down to Cushing, Oklahoma with like a series of, I don't know, couple hundred semis that could handle all of the loads that you're going to put on there, and then drove them up to New Jersey, only to have the EPA and everybody from the Fed coming down on you saying, you can't put this stuff in the middle of the city without proper storage and all the rest. But people didn't understand. And
No.
like you said, investigate before you invest is another great expression.
Oh, well, it is. And they, having been with the Onassis people that used to ship in their super tankers, when you said they're 30,000 to 200,000, I remember when it was only $5,000 a day. Of course, the cost of everything is gone up dramatically. And having been to Cushing, Oklahoma, which is no great metropolis, and the guys in Oklahoma and Texas and from the oil patch laugh at the rest of the world. There's a saying, if an oil deal gets out of Texas to New York, it's no good. Because there's plenty of money in Texas to do any oil deal that's worth a shit.
Mm-hmm.
But I was a junior partner for the Hunt brothers. Bunker Hunt was a mentor of mine, Bunky. I was with them when they unfortunately got involved in capturing the silver market. But he told me back then two things, words of wisdom. Number one, if you're worrying about paying taxes, you're not making enough money. That's number one. And number two, you can never underestimate how wrong you can be. They thought they were doing the country a favor capturing the silver market, which is a whole other story, which I didn't necessarily agree with. But the guys that come from that realm are the oil business is the last bastion of gunslingers. They're the last, and the crude oil traders for the big companies, the Exxons and the companies you just alluded to, are gunslingers. And but they've got these billion-dollar balance sheets behind it. It's one thing being a gunslinger when you've got, that kind of money behind you, but most of the guys and gals that are involved in trading these things, a rising tide brings all boats up. And we've had a rising tide for up until just recently for 11 years. So a monkey can make money. And now in the next 2, 3, 4 years, it's my opinion that it's going to separate the boys from the men. And not everybody's going to make money. And to me, the Dow is, if not overpriced, it's at least fairly priced at these levels. Okay. And the time for when it was underpriced was when 2,500, 3,000 points ago on the Dow. But people, are still, the advice that's given is given normally by somebody that's selling something.
Yep.
I'm the only guy that I'm aware of that when asked, gives advice, and I'm not selling anything. And one of the reasons I've been privileged to work with 3 of the big sovereign funds, 2 of which are oil-centric, Norway, Kuwait, and China, is because I'm not selling anything. And when I tell them, and when you tell the big sovereign funds that they're full of shit, I'm more polite than that, but not much more polite than that. Mm-hmm. Because McKinsey's not going to tell them they're full of shit. Boston Consulting's not going to tell them they're full of shit. you know, Goldman Sachs isn't going to tell them they're full of shit. The way they say they're full of shit is, have you ever considered this other alternative? That's their way of saying you're full of shit.
Mhm.
And whereas I just say you're full of shit. And it's a lot. There's a lot of guys, and you and your brother, which in fact, when I went back and I was looking at, let's see, who was with the Bears? Yeah.
That was me.
Okay. Well, I have one classmate from high school
Mhm.
who was a 5th round draft pick. And he went with the Philadelphia. He was there 6 or 7 years. I believe he became the captain. And then I guess when you're past your prime, they farm you out.
Yep.
And he spent 2 years with the Bears. His name was Mark Nordquist. When I played football with him in high school, he was a 6'4" quarterback, which is a big quarterback back in 1961, 2 and 3.
Okay.
He put on 60 pounds and became he went from 220 to 280 and became a center.
Oh.
But he was a gifted athlete. So, I mean, but I was going back and looking at that. And I guess your brother was the one that was with Tampa.
Yep. Pete played
Okay.
for the Vikings and Seattle and Tampa and the Raiders as well. Yeah, he had a real career, Dan. I had 4 games,
Okay.
which I loved, and it brought me to Chicago, which I am ever grateful for, because I got here and I saw these markets, and the same markets that you helped forge when you were here with the beginnings of the SIBO. And I just fell in love with the pits. The pits were so fun because it was all bam, sold. It was so high energy. And people don't appreciate that anymore because now it's all just numbers on a screen. Literally, as you said, algorithms, high frequency trading, the game has changed completely. Even though people can still make money, people like yourself, like Warren Buffett, with that longer term time horizon, especially if you hedge or if you take in some option premium occasionally, you can really do well in the markets. But yeah, I'm not saying they're rigged, but tell me what you think of things like Fed intervention. Tell me what you think of that.
Now. I mean, in 2008 and 9, I would have let the banks go under.
Mm-hmm.
Okay.
Okay.
It's called the market. Okay. And this, my pet peeve about and when they said they were putting up $1 trillion, I said it's going to be 3 to 5 trillion. Now they're talking about it's going to be 3 or 4 trillion. Why are the cruise lines who have avoided U.S. taxes, they're all out of Panama, why are they getting bailed out?
Mm-hmm.
Okay. There's several others. The guy that the Asian guy who owns I can't think of his name. He's got the Freedom Capital, where he said that he would let the airlines go down. He said it on
Chamath Palihapitiya or
something.
Yeah,
I agree.
Mm-hmm.
Okay, now is the government going to be there to bail everybody? Now the little guy that owns a textile station 4 miles from here, nobody's bailing him out.
Mm-hmm.
And I also believed, and I'm unfortunately validated, that a lot of the money didn't go to where it's supposed to go. When Ruth Chris, which I love their steaks, when Ruth Chris can get 5 million or 7 million, and when the LA Lakers can get whatever, I mean, what the hell? I mean, who shot John there? I mean, it's unbelievable.
Yep.
Now the second tranche of money supposedly is going to more where it's supposed to go. But I think the government bail, and I understand why President Trump's doing it. He wants to get reelected. Nobody wants to pull the trigger on the economy. So your legacy is, well, I took the economy down 60% and half of the banks went out of business. Nobody wants that legacy.
Right.
Nobody wants that legacy. And but until that happens, I personally thought that this would be the perfect time to get rid of the deficit.
Mhm.
But I mean, I'm President Trump, even though I haven't talked to him 25 years, certainly doesn't want, you know, he doesn't want the Depression, the second 1929, to be on his resume. But until somebody steps up to the bar and says that, you know, I'm gonna, you know, the buck stops with me. And when these big CEOs of these companies take a half pay cut, so they've gone from 20 million to 10 million. I mean,
They're tightening their belts, Dan.
well, I can understand that, but you know, again, full disclosure, I've been in cash for about 15 years. I don't own any assets. We don't own it. We have no debt, and I'm not worried about inflation. Really wealthy people that I know are not worried about a return on their investment. They're worried about a return of their investment. And if you can't live with inflation, then you didn't make enough money.
Mhm.
I use the analogy, if you put $1 million in the stock market in 2008, before the collapse,
Mhm.
your money roughly doubled, a little better than doubled. Okay, so now you got 2 million. Can you retire on 2 million at current interest rates? No. Okay, you're gonna have to live off of principal. And so my idea has always been that don't worry about inflation, just worry about you know, making more money. And just recently, I haven't had a paycheck since 1992. And to move back to the UK, I had to have a job. So my wife hired me for £1,000 a month to I don't know what they call me here, but I'm something. I certainly don't do anything for the thousand. I shouldn't say this on TV. I don't do anything for the £1,000 a month, but you have to have, you can't just be indigent. You know, otherwise you can't move back. But I'm not for the bailouts. I'm just not, because then we haven't learned anything.
Where do you see whether it was like you said, you're not investing in stocks right now, but would you see a certain sector that's going to really benefit from
Oh yeah,
this?
if it's
Okay.
not healthcare or technology, short it.
Yes. Yes, I agree with you, sir.
Yeah,
I agree wholeheartedly. You see what, I mean, all these pharmaceutical companies, the small ones that have anything successful at all, and I don't just mean for COVID, but the small ones are being bought every single day. There's not a day that goes by that I don't see mergers and acquisitions, M&A in that space. You know, whether it's Alexion, a big, you know, multinational drug company buying a little company and paying $1 billion for it, or whether it's a bigger deal. All of those deals are happening every single day. Pharma, healthcare, and I agree with you. That is where people are going to be. Not just investing for COVID, not just Johnson & Johnson and Pfizer and Roche and Gilead, but everything in that pharma and healthcare space. I agree.
my age group and half a generation younger than I do don't want to die. So we're going to continue to put money in to healthcare. Okay. The cloud, which I used to make fun of, you know, I like Bill Gates. I miss the internet. You know, I was a late comer, but it's technology driven now. I mean, and it's technology coupled to healthcare. I mean, I talked to one of my doctors a few days ago, just like we're talking.
Mm-hmm.
I would have, you know, and I just got his bill today, which, you know, I could have been down there for 3 days in London and stayed at the Ritz-Carlton for what I paid for the goddamn call on Zoom. But that's fine. It's certainly more convenient. I'm not sure, you may have read, in fact, I think it may have been said on CNBC, we're losing about 25 billion a day under lockdown in the US.
Yep.
I believe we're losing another 5 to 10 billion a day because of lack of productivity. Because if you think I've managed people 50 years, 35 of which virtually. They're not as productive. And if you think they are, what are you smoking? If it's not addicted, give me some. I mean, that's bullshit. I mean, how can they possibly think the country, because there's a lot of what this has proved is we don't need a lot of big office buildings.
Mm-hmm.
We had a guy, again, I think it was on CNBC, that said he tried to convince everybody that what we need is twice as much real estate now because there are only going to be half as many in the buildings. Now, what the hell's he smoking?
Yeah.
I mean, if it's retail, travel, leisure, it's dead for the foreseeable future. It just is. I personally don't like the idea that you can, the guys that are on the floor of the various exchanges can do it from home. I think there's a certain specialness about seeing the guys running around, making markets, etc. But that's all changed now. The bid and the ask game is on a tablet now.
Yep.
It's still a great place to cut your teeth.
Oh yeah, I agree. It is. And you mentioned technology, and so obviously I want to talk about some of the things that you do right now with technology, because you might not invest in Apple or in any of these assets, but you create your own by virtue of what you've brought by getting people excited. And I know you used to, I don't know if you still, do you still bring folks to Guthrie Castle?
Oh yeah, yeah. In fact, on March, our seminar was closed down by the police on the third day because we did the spacing. We have enough room here. We have a 35,000 square foot pavilion that I turned into the seminar thing and spacing, and all the stuff that you're supposed to. And because we only take 25 people in the seminar, we have 25 bedrooms. I mean, we can do all that. But then when the government said that groups larger than 10 had to be shut down, that's when they came in and they shut us down. We were talking about Brian Rose before you got on.
Yeah.
Who's one of my more successful mentees. And we have a number of them. I don't agree with all the politics of all my kids, but I do agree that where interest rates are the lowest in 5,000 years. They're almost giving away the money, and at the current interest rates, it's like giving away the money. And the opportunities, my whole methodology revolves around motivated sellers and seller finance and commercial debt, not private equity debt, or not private equity. And what most people don't understand is private equity is not equity. It's they draw down their lines of credit at banks, so they're using debt. They're not using nobody's writing a check for cash. But right now, I said about 5-6 weeks ago, whatever deal were cut towards the end of last year and the beginning of this year are between 25 and 50% less than you paid for it. And in some cases, they're worth zero. If you bought a chain of, let's say, Ruth Chris, you bought 5 Ruth Chris.
Okay.
And you probably paid, between 8 and 12 times EBITDA. Well, they're now worth half of that. Now, how is a Ruth Chris that takes 200 people in the restaurant going to survive with 60? How is it? I mean, you tell me. Disneyland or Disney World, and I heard
No, you're exactly.
They were pontificated about Disney today on the show in your absence. And they had some analyst who's a specialist, and I take her at her word, and they say that they're maybe going to be able to do 20 to 30% of the revenue from last year, this year, 20 to 30, okay?
Mm-hmm.
And so then somebody asked them on the panel, your panel, well, do they make money at that? And she said, Probably not. Probably not. Okay, now we're not talking about writing calls against Disney or stuff like that. But I mean, so if Disney can't make money and they're opening Disney next Monday, I forget which one they're opening.
Mhm.
What's going to happen? Are you going to take your kids, or is somebody going to take their kids to stand in a line? The lines are already long at Disneyland, Disney World. I just went there about 6 or 7 years ago, and my wife and I said, "This is a young man's game. This is bullshit." You
Yeah.
know, but in Disneyland in LA, Orange County, they have alcohol now.
Mhm.
So we found a place, and it doesn't have a big sign. It doesn't have a big sign, booze, booze, booze. But we found one, and we sat in the bar having cocktails. And I said, "When you get done, kids, come back and collect us." You know, but the world has changed. I mean, what are they going to do with all the airplanes?
Yeah. Really, I mean, look at that, you spoke of private equity and GE Capital and any of these folks that have traditionally been involved in financing these aircraft, because we both know American doesn't own them, United doesn't own them, they lease them.
Correct.
And that thing has to keep moving. And that's why they're constantly going, from Chicago to New York, back and forth and back and forth. And now instead of 20 flights a day, they're doing 2. And like you said, they're going to have spacing, just like at Disneyland or like at the restaurant. This is going to be a significant problem. Obviously, many of these problems, Dan, would be solved by a vaccine, but we don't know when that comes. In the meantime, it's just herd. Are we going to build up a herd immunity? And are a number of folks not going to go back out onto boats, into planes, into any crowds in theaters? And your point about restaurants is extremely well taken, because I used to own restaurants. I owned 3 different restaurants, 2 of which failed, and they were packed. But we probably were running at 85% capacity, and we weren't making money. Now, that's my fault. That's the people running the restaurant. But I guarantee there's not a restaurateur, except for, maybe the guy that runs Per Se or something like that, that could possibly make money with half full restaurant. If the fire marshal says you can have 180 people and you now can only have 90 because you have to space them out, you can't make money. You double up your prices, nobody's going to come. So I don't know how they're going to do this.
The guy that owns Daniel's in New York, arguably one of the best restaurants, Michelin restaurants, and supposedly he disagreed with this when he was being interviewed, the most expensive restaurant, and he didn't like that when they said that. But he said there's no way humanly possible that restaurants, and he hung it on Michelin star type restaurants can survive with a third of the seating.
Right.
None.
No way. Absolutely not. I agree. And that's Daniel Boulay. That's one of the chefs. And, it doesn't matter who you are. You can't make money. So you could literally put a whole bunch of these stocks, I think, Daniel, into one bin over on the side and say, until there's a vaccine, do not touch these. These are do not touch stocks. And that could be everything from, although I will say, I bought Carnival Cruise Line debt because it was paying 12%, Daniel, and I don't mind being first in line for those boats, even though I don't want to own them, of course, but by being a debt holder rather than being an equity holder, I think you've got a little more chance.
No, that's true. That's true. Well, I said off the cuff, and I was wrong. I made a Trump exaggeration when this first happened. I said, I will buy cruise boats for scrap iron value as I did drilling rigs in the early 80s at $5 a pound. Now, I went over the top a little there, but not by much. Who's going to get on a ship with 3,000 people? Well, first of all, the 3,000 people don't hold 3,000 now. Okay. And the overhead on those big boats is pretty horrendous. I mean, and the more expensive cruises where you've got butlers and stuff like that, that Sally and I were privileged enough to have, you can't afford a butler for every 4 rooms now. Now the butler, if they have butlers, is going to be for every 12 rooms. And that means you're not going to get the same service being 1/12. I mean, it goes across the board. I mean, the world's a different place. It just is. And before kids were complaining about they can't get started on the property ladder. That's what I heard. Okay. To buy a house. Okay. Now our kids that are millennials, and we didn't give them any money. Somehow they bought fucking houses. But they're in the upper echelon, unlike their father and mother. They went to great schools, got great jobs. They've been there 10 years, and now they make pretty decent money. Okay, but for the average kid, I can understand. How do you buy in California, a cheap house is $500,000 bucks.
Yep.
In Oklahoma, that's a big house. But I
Huge.
mean, in Los Angeles, and so but the world is changed, and but if you want to get rich, you don't go to work for Procter & Gamble. You go down to the pits.
Yeah, that's true. But not everybody's going to go down to the pits, but they could go out and bet on themselves like you did when you were out there.
Well, when I used to trade commodities, I mean, I thought that I had gone to heaven. And it was in my personality. But I was willing to make big bets on my intuition, and that's, you don't make, unless you've got, like Warren Buffett says, one of the reasons he's so successful, he's been around 1,000 years and compounded interest rates. Okay.
Yep.
Well, the kids don't want to wait 1,000 years. The kids are entitled. They think they should make money quicker. Like my generation, supposedly in the 80s, was a generation that ripped the guts out of the financial world. Well, I was part of that generation. And now the guts are being ripped out, not by individuals, but by a catastrophe, unfortunately. But we'll adapt, but it's going to take. Some industries will never go back. I read or listened to a diabolical guy, I think it was on CNN a few days ago, that said that in 10 years from now, 40% of the businesses that were in existence January 1, 2020 won't be here. I think he said 40. Yeah, 40. But you can say that about any 10-year period. A lot of businesses are going to disappear. But the people that, for example, Goldman Sachs has 14,000 people working in Manhattan that have been working from home. Goldman Sachs CEO said, I'm sure he's going to be sorry he said this, we have not had one blip in efficiency. But then why you need all those buildings?
Yep. You don't.
Exactly.
And if they can all work remotely, why the heck wouldn't you be based in a tax-free state? Why would you be based in, I mean, I think you're going to see, now granted, when you've got 30 million people out of work, which is, I guess, the number we're at right now in the United States, when 30 million people are out of work, it's a little hard to move for a job down to one of those tax-free states, down to Nevada, Texas, Florida, Washington State, parts of Tennessee, on the corporate side, they have either corporate or individual tax rates that are better than, paying New York tax, which can be 11 to 12% on the high end. But I think a lot of movement is going to happen because of this, not to mention that people might not be as comfortable being on top of each other, Dan,
correct,
as they had been up until now. they might want a little more spacing,
Well,
even if they do have a
I've
vaccine.
never been shake hands, hug, kiss kind of guy. I don't like that. And but I've been like that all my life. And but I just had a flash. I want to ask you.
Sure.
When you see a Forex commercial or those kind of commercials, it says between 68 and 87% of the people, retail customers, lose money. It says down in the fine print. If you stop it, and people, I mean, and it goes back whoom, like this.
Yep.
Okay. But people still do it.
Mhm.
Why?
I think the same reason they buy lottery tickets. I think they do it because even though the leverage has been taken down, it's not 200 to 1 anymore, at least for people within the United States. Unless they're trading on a VPN, Dan, they can't get that kind of leverage anymore within the United States. You can still get it, I think, over in London, in the UK and things like that. Different Forex rules apply by country. But in the United States, I think it's down to it's either 50 or 100 to 1, which is still crazy. But that's how I think, somebody with $100, $500 can punt, as you guys like to say when you're in Great Britain. They call it a punt when you're taking a shot on something. And with that kind of leverage, if you're right, you and I know how addictive it is when you're right on a leveraged trade. Because the money just pours in when you're right. But on the other hand, it's only got to move this much against you, and they've liquidated your position.
Well, I mean, the being short the market, unless you can find the shares to deliver, or being short options, etc., then it's the only game in town that you can lose more than you started with. I mean, and there are some people that I've sat in this room over cocktails that still don't understand that you can, that you can lose more than you started with if the market goes against you. And I've had that churning, sick stomach feeling. I was short the market, and you're too young to remember, but the market bottomed at first in October 74, the Dow. And then it bounced up, and then it rebottomed, a double bottom in December of 74. And unfortunately, and I was writing three calls against 100 shares of AT&T. And I had a lot of corporate clients. I had Bank of America and all kinds of people that had never written options. I convinced them the option strategy to write. The controller of Bank of America lost his job. I can name a whole bunch of guys that lost their jobs because they wiped out. I used to be one of the managers of the Los Angeles Police Department's pension fund because my dad was a cop before he became the CIA. And so I still remember trying to explain to him how we could lose money on their AT&T position because we had wrote twofers only. Because we had to buy an extra 100 shares when the stock got called away from us.
Yep.
And I remember that sick feeling going up that elevator even today to see all those guys. And the police pension fund guys all had guns.
Yeah, that's a dangerous thing, Dan.
Yeah.
Well, so what kind you're still, you said they shut you down in March.
Yes, sir.
How far out before you do your next one?
Well, the next one is planned first week in June,
Mhm.
and then the first week in July, assuming that and we're all set up. As I was telling my wife today, we're Corona equipped because we've got all this stuff, from the chefs down to the people that work on the estate. Of course, our estate employees, I mean, the guy that cuts the golf course lawns may not see the guy that's in the wall garden, but once a week. So that's not the problem. But in the pavilion we're set up. I'm not giving any other seminars other than here. I'm looking forward to it. This is our market. We have guys closing deals. you know, we've got teenage multimillionaires like yourself and your brother flying around in your own jet, you know. But now is the time. I mean, but you got to step up. You know, I was asked 30 years ago when I spoke at the Harvard Club in New York City, Mr. Peña, do you consider your extraordinary wealth in such a short period of time balls or brains? And I said 50-50. I now say 30 years later, 90-10.
Balls
90,
and then
90 balls, 10% brains. But it's tough. I mean, and I'm sure because of my trading, my previous life, career, you know, I wasn't right on every position. All you had to be right is one big position, you know. And I learned that, and to that extent, you know, it boded well for me. And my experience from Wall Street guys, and my experience in the options, and even commodities. I think through commodities, I learned what not to do. And in commodities, I learned the market tells you whether you're right or wrong.
Right.
You know, and you don't have to think about it. You don't have to think about it. But today's kids that have grown up, and I'm sure that even some of the people that have money to manage, because I know you guys manage a bunch of money. The second and third generation kids that didn't make the money don't understand the consternation it is to make it. And it's quite remarkable. Up here where I live, the Guthries, Squire Guthrie went to get William Wallace from France to come down and fight the English in 1296. And he was like the Chancellor of the Exchequer of the first Scottish government. And but up here, nobody's made any money other than me in 200 years. What you do is you go to great schools, you go in the military for not dissimilar to the Royal the Royal kids, and then you come out and you drink yourself to death. Now the Royals aren't drinking themselves to death, the best I can tell, but I mean you know, when I came here 35 years ago, there was 5 million people in Scotland. Today, there's 4.9 million. And they didn't all move to Chicago to trade options.
No, but it's beautiful country there.
Oh,
I've heard it said that people in Scotland, why did people move to Scotland? Because Irish weather wasn't bad enough for them. So they had to move to Scotland.
Well, there's a lot of truth in that. Although it's been sunny as hell the last 2-3 days, and that fools people because the sun comes out about between 30 and 50 days a year. We had 3 of the days just now, the last 3 days.
So you're borrowing from that bank then already.
Correct. And I mean, you and your brother in the neighborhood, let me know. We have our own golf course. We have no neighbors. I mean, but which is great for distancing. It's quite a place. But I loved Chicago when I was there.
Well, if you come this way, Daniel, we'd love to host you.
Very good. Thank you very much.
Just give the word, and I'll be there with my wife, Bridget, to see you and Sally, or if you ever want to do anything together, we'd love to work with you guys.
Very good. Thank you.
I respect the heck out of what you've built, and I really appreciate your time. You've been very generous with it. Thank you.
Well, no, it's my pleasure. You happen to be the recipients of me paying back to Minnesota. Although Jesse never asked me to do anything. I'm sure I would have said yes if he had asked, but anyway. It's a strange world, and I don't envy you guys having to adapt, because most people, when the market's going your way and you're making everybody money, everybody's happy with it.
True.
Okay, and I'm sure we've all been in situations where the trade went against us.
Absolutely.
and then they want to know why'd you do that? You know, like if you did it on purpose.
Yeah.
And why am I paying you so much? I don't know if they still complain about that. But I enjoy seeing you and your brother on that panel, and and so when Judge is reading off messages, I say, I wonder if I texted him, if he really read my question. You know, are those for real questions?
Yeah, they are. Yeah, they are. I will. I'll try to get you the ability to shoot in some questions, Dan. We'd love to get your.
Oh yeah, I'd like to ask some
on that show. And you know, we don't have a lot of trillionaires that dial in, so you would be the first.
Okay, well, I've enjoyed very much, and if there's any way I can help you and your brother, let me know.
Okay, my best to Sally. Thank you guys so much for setting this up,
Thank
Daniel.
Thank
Have
you
a
very much.
wonderful evening.
Okay, thank you very much.
Be well.
Ciao.